Let's get started here. Okay, let's do this. And delete this here. There we go. Let's go in the 1 hour time frame. Let's mark out this support resistance here in the hourly. This is on the Higanashi chart, so it makes it a little easier to see. I'm gonna switch back and forth here. determine our directional bias. 15-minute break of structure to the upside right here. After green candle closes over this high. So that's 15 minutes bullish. 30 minutes, same thing, close over this high right here. And then on the 1 hour, it says bullish, but it should be bearish. Sorry, most recent break of structure to the downside. So 15 minutes bullish, 30 minute is bullish, 1 hour is bearish. Let's go on our 5-minute time frame. Let's mark out these 5-minute gaps. Doesn't like we have much here. So bearish. Okay, go to our 1-minute time frame. Mark out any inversions here, or 1-minute gaps as well. Just gonna put a 5 in these boxes, just letting me know that these are the 5-minute gaps. Oops. You have the 1-minute gap right here. This one you have a bearish FEG up here. Same thing up here. Bearish FEG. There. In this one you have a bullish gap that becomes a bearish inversion. So this right here is a bullish gap. Price broke through it. Now it becomes a bearish inversion. So this zone up here is pretty strong when you have inversion zones. 1-minute inversion stacked on with a 1-minute gap. Here goes another one here. Bearish inversion. Price broke through it, came down, broke through it, came up, retested, and came back down. Okay, let's see what else we have here. This one, kind of hard to see, but bearish FEG right here. All right. Push this over. This is a bearish FEG, becomes bullish inversion. Price came back down, retested it, but then broke to the downside, so that's no longer good there. Okay, everything here is pretty good so far. Here's a bullish gap that's pretty small. It's hard to see here. Bullish gap here. And this is also a bullish gap right here as well. here. Lots of bullish gaps. Bearish gap becomes bullish inversion. So this zone is stacked on connected with this bullish gap. So this zone is pretty strong too. Let's see. Candle body high that created this bearish gap would be right here. So I want price to close over that line, that orange line as well. So we're on the 5 minute. 5 minute, we're sitting inside of this supply zone right here. We're not gonna look for any supply demand or breakout trades, just because 15 minute, 30 minute is bullish, 1 hour is bearish. We have this purple line up here, so if we're looking for those types of trade, I want the purple line, the 200 EMA, to be sitting below price down here. 13 EMA, 50 EMA. So that's kind of the order we're looking for. So since that's the case, today we're just going to be trading the inverse fair value gap strategy. This appears 15-second liquidity point. While this is running, what I'm gonna do is mute this session. Let's go check back on our Kanashi support resistance. Here's a level right here. Just want to confirm, make sure that's all marked out correctly up here. Yeah, price pushing up. I do want to connect these right here. Just gonna fine tune this zone right here a little bit. All right, what we're looking for on the 1 minute is see if we could use a bullish inversion to push to continue on up, or a bearish inversion to continue downwards here. Just go to the downside. We have a couple 5 minute gaps that we have to look out for. Let's mark out these 1 minute liquidities. Right here you have a little bit of support. So this became support, or this is a support level where it pushed priced up. But then it broke through, it now becomes resistance. And this becomes a resistance here, where it's keeping price down. Down here we have a little bit of, so 15-minute price was unable to break through this level here. Just kind of kept pushed down, but never closed down further. So go back to the 1 minute, see what we have here. I would say if price is able to close above these here, come back, use that as a bullish inversion, and then target this 5-minute gap up here. That'll be a good one. On the 1 minute, we are bullish on the 1 minute here, given where the 13 EMA 50 SMA is. Right now, if this bearish gap forms, and see, 41 seconds. Let's see if it forms. It closed over. So if it did form, we could use that bearish gap as a bullish inversion if price breaks through it, and then continue to the upside. We are in a demand zone here. The only thing is that we're not going to take a demand setup just because the 200 EMA is sitting above here. But if it was below here, that'd be good. If it was below price instead of above price, because you want to trade price. Price would have to trade above the 200 EMA, not below it. I'm just gonna delete this since we don't need it here. Right now on the price is just ranging right now in between these levels here. So right here until it decides to break out to one side. 1 minute liquidity right here. This price is just ranging right here in this area. You want it to trade to, if we're looking for a setup, a trade outside of this range here. This price is resisting off this support resistance zone right here. All right, so the candle body low that created this bullish gap is right here. If we're gonna use this as a bearish inversion, if it flips over, then I would need that to close over this orange line. But we do have this 5-minute gap here that's close by, extremely close. So I would wait. See here. I would wait, because if you're gonna take a trade from here inside this and you're sitting in this 5-minute gap, then it's not too good. So we have a bearish gap right here. All right, on the 5-minute, looks like this 5-minute gap right here. The left side is broken, so we'll just delete this. So what our time frame we have, yeah, still bearish. On the 5-minute, there's a 5-minute gap forming here. It's on the 5-minute. I'll be right back. Let's get back to work. This right here becomes a bearish inversion. After this red candle body closed outside of this bullish gap right here. The candle body closed down here. Let's see, on the 5 minute we do have this gap. Bearish gap on the 5 minute. Let's go on the 1 minute. Now, since this red candle body closed over this orange line, which is this candle body low that created this bullish gap, it's considered a really good bearish inversion zone to use now. Took out 1 minute liquidity. Just delete this here. There's a bearish gap here. On the 1 minute, we're bearish. I would say if price comes back, we could possibly target this 1 minute gap down here. Depending on the setup, this 5 minute gap is just pretty close to this bearish inversion zone that could keep price up instead of if we're looking for shorts. But let's see what the RR would be. What I'm going to do is change to my Heikin-Ashi chart here. I want a green candle pullback and not just a red candle here. I want a deeper pullback, so I want a green candle on the Heikin-Ashi chart. All right, so this is what happens here. This candle close over that. Let me show you here. Over this bearish inversion, so this no longer is good. This becomes a bullish inversion right here. But on the 1 minute, we're still bearish, just because 50 SMA and 13 EMA price is trading in between here. So bullish gap. See this 5-minute, this is broken. This 5-minute gap right here, this green candle closed over it, so that's broken. On the 1 minute, let's see, price closed over it with that green candle right here. This becomes a bullish inversion here. Let's see how price reacts. This bullish inversion zone probably won't hold, so I'm just gonna delete that one there. Now on the 5-minute, price is ranging in between these two, this high and then over here. So ranging in between here. Possibly catch it, see if there's a setup that happens. You can still catch a setup that happens in between the range. On the 1 minute, we're still bearish overall. One minute we're bearish, so I wouldn't be looking to take a trade for longs off of this bullish FEG here. Looks like price is going to close over it, so we'll delete that. This becomes a bearish inversion. I would want price to close over this candle low right here that created this bullish FEG, and then retrace back and then continue back down. We're just sitting near a 5-minute gap here that's close. That could push price up if we're looking for shorts, so it could stop us out. So I would kind of want price to hold this zone, come back down, close over this orange line, come back up, look for an entry, and then target this 1 minute liquidity down here. Though I would want entry would be somewhere around this level, just so we could, if we get in, we could be in some profit and start trailing once it hits this 5-minute gap here. All right, this might close over it, but let's see. So it opened, it didn't, this candle didn't close over it, but it did open below it, so that's good. It tells me that there's sell pressure, or sellers are in control. So if we get pull back, get a good entry somewhere here, and then target this 1 minute liquidity. And then if it taps the 15 or the 5 minute gap, then we could we can start trailing the 15-second. Yeah, I would need a green. I would need a, let's see. I would need a green candle pullback here. Need to pull back some more. Form a green Heikin-Ashi candle. And then let's see if it respects this inversion zone. I'm gonna need a long lower. I need the lower wick has to be longer than the upper wick for me to enter, to break, use that candle to break off of to enter. It doesn't look like any of the inversion zones are being respected right now. So forms it, but no entry yet. It did bounce off this 5 minute gap right here. All right, so I'm just gonna delete that. There's no entry on that one. Bearish inversion is broken here. We have this bullish gap that's being formed. Now, if price breaks through this bullish gap and flips it to a bearish inversion, then we could look for something like this. Yeah, on the 5 minute, like I said, price is still ranging in between these levels here. So we got this support here, right here. You got resistance up here. But on the 1 minute, even though it's ranging, on the 5 minute, we could still scalp it and catch a trade on the 1 minute time frame. This is looking like here. Looks like it still wants to push up. Once this 13 EMA crosses the 50 SMA, we're bullish here. This candle's creating this 1 minute gap. Now, if it disrespects this and converts into a bearish inversion zone, then we could target, start trading below this 13 EMA right here, and maybe enter and target this down here. So that could be a setup as well. See what happens. It's coming back and retesting this area right here. So a couple of wicks around these areas. Tells me that there's lots of buyers and sellers in this area. Now this, let's see if it flips to become a bearish inversion zone. If that's the case, then we could start trading below this 13 EMA and look for shorts. Closed over it, becomes a bearish inversion. I still need price to close below this orange line right here. Which anything above this orange line is still some good bull pressure, some good buyers in this area. And I want that candle body to close over it just to let me know that sellers are in control, and I could use that bearish inversion to look for shorts. This could be the candle that closes over this orange line. It looks like it's gonna do that. So this is a good bearish inversion to trade off of. I want price to come back, respect this area, and then we'll target this 1 minute liquidity down here. Trading below, entry would have to be below this 13 EMA, the white line. Here goes another zone that it may respect as well. right here where, sorry, not respect, but breakthrough, and then this becomes a bearish inversion right here. Same thing. You could have this scenario, or you could have, depending on if price is able to close below this orange line, come back down and then target this 1 minute liquidity down here. The 15-second liquidity is sitting right here. All right, this becomes a bearish inversion. Yeah, it looks like price opened, yeah, below this orange line, so we could use this bearish inversion zone here. I'm gonna set alert. Everything's trading below this 13 EMA and 50 SMA, so we're overall bearish. If we get a pullback here and price respects that zone, this is what we're looking for. So we could target that. Took out this 15-second liquidity. Now this is a key area where price reacted off of as well. So this 5 minute, we have this level right here where it's like support. Bearish FEG here. Price take this 1 minute liquidity. You have this large bullish gap here. Looks like price is still holding at this 5 minute gap right here. I'm gonna delete this alert here just because where the 13 EMA is. If we're looking to trade below it or enter below it, and then the stop would be somewhere up here. We'd have this bearish FEG that become a bullish inversion once price gets back up and closes over it to tap into this bearish inversion. So it would be not too good of a trade in that area. Now this big bullish gap right here could become a bearish inversion. If price comes down, we'd go we'd use that and then target this 1 minute liquidity down here. And that's a possible setup. Yeah, price just came back up here and then dumped straight down without tapping into these bearish inversion zones. On the 5 minute, this bullish gap is broken here. This red candle body closed over it, and we'll delete that one here. Go back to the 1 minute. So that's the body that created this large bullish gap, or the candle body low that created it. This one here would be right, yeah, there. Okay, here's what we could do, or possible setup. Here's a bullish inversion or bullish gap. I need price to close below that, and then below this orange line right here, come back, and then we continue downwards. That's a possible scenario. All right, so this becomes a bearish inversion. I would say a high probability bearish inversion would be price still needs to close below this orange line and then come back up, retrace, enter somewhere up there, and then continue downwards. Looking to TP right here, while if we're in the trade, we'll trail. There's these bullish inversion zones here, this bullish gap, and there's this 1 hour support zone. This is a bearish inversion. Still want price to close below this orange line, because this is the big green candle that created this bullish inversion initially, this bullish FEG initially. There's a bearish gap here. Say this bearish inversion still holding. Still need a break of this orange line though. A close over this orange line. The green candle closed over this bearish inversion, so this bearish inversion zone is no longer good. So we'll delete that there. Let's see what price wants to do, if it wants to continue downwards, and then we could possibly use this bullish gap that flips to become a bearish inversion to continue downwards here. I'm going to delete this orange line because it's no longer attached to that that inversion, that bearish inversion. The price from here, it looks like may close over this bearish inversion. Sorry, bearish gap. But let's see. Oh, it's holding. So this right here, this is a strong bearish gap just because it was connected to this bearish inversion here. Even though this bearish inversion is no longer good anymore, this bearish FEG is pretty strong. I'm not gonna trade off of this gap though. I'm just gonna wait until we could use an inversion zone to take trades off of. Let me see here. Have a long lower. Let me enter, let's use this. Do a sell stop. Let's do a 100 or let's do 100 here. Then I'm gonna target down here. A 15-second liquidity sitting down here. There's another liquidity down here. I like this gap because it was initially connected to this bearish inversion. There was a 15-second. Let me see here. Yeah, I'm gonna trail this. Nice. Took out these 15-second liquidity zones. Okay, here's what we're gonna do. Delete. So price closed over this orange line, which is the candle by a low that created this bullish gap. This becomes a bearish inversion now. Bearish inversion. Gonna delete this here. I want price to pull back into this bearish inversion. That's what we're gonna look for, and then let's say entry off of there. If it does pull back, and then we could target this 1 minute liquidity down here. That was a quick scalp on that one there. It was good trade. Sorry, this is a, yeah, there. Good strong FVG. Yeah. So we're looking for price to pull back into this bearish inversion, respect it, and then come back down and target this 1 minute liquidity. And then we would trail in this area right here. This right here is a strong FVG as well, since it's connected to this bullish inversion. Anytime you have a 1 minute gap that's connected, it's touching touching the inversion, then it's a strong gap here. Now, if price is able to close below here, use this FEG as a bearish inversion, then you could target that right there, that 1 minute liquidity. So that would be a possible setup as well. On the 5 minute, there's a 5 minute bearish gap that's forming here. Just gonna put alert to see if price pulls back and respects this bearish inversion zone for which we could possibly take a trade off of. If we're entering below the 13 EMA, the setup would look like something like this. Target down here. Even if it taps into this bearish inversion zone here, I would wait until this 5-minute gap that's forming closes first. It has about 1 minute and 20 seconds left here. See, the better setup would be something like this instead of like this, just because this 13 EMA is here. So you want to enter below here, and then by the time you enter, you're pretty close to this to all these bullish. This area is really bullish right here. You got bullish inversion, strong gap, and then you got this gold bar 1 hour resistance right there. That's gonna hold price up if you're looking for shorts. All right, so that 5-minute gap closed. I'm just gonna mark it out, but let's see what happens. Just gonna put a 5 here, just letting me know it's on the 5-minute. Tapped into that 5-minute gap there, and now it's reacting off of it a little bit, pushing price down. This 5-minute gap may keep price down even before it taps back into this bearish inversion zone sitting at the top. Here we have 15-second liquidity that formed. Okay. Now, even if it taps into this bearish inversion, what I want price to trade is below this 13 EMA if we're looking for an entry here. So if this bearish inversion zone holds up here and you're looking to enter below this 13 EMA, I'd say that would be pretty decent. So you get, let's say if it enters or entered in here, if it sets up, then you could start trailing it, or you have this much in profit here until you hit this bullish inversion zone and this this FEG right here, along with this support zone right here that could push price all the way back up, but have a little bit of wiggle room here. Let's see what happens. What I'm going to do is I'm going to switch to the Higanashi chart and see if we can look for an entry. Hasn't tagged us into this bearish inversion zone yet. Here we go. Let's see here. What I'm waiting for is a candle close over this, below this 13 EMA for a possible entry. Just gonna keep adjusting the stop loss here until we get a valid entry. It's not too bad if we end up entering somewhere around here where it's below the 13 EMA, then we have some wiggle room to work with if price drops down, and then we start drilling from down there. Still looking for that candle close below this 13 EMA though to play off of. Right now we're in a strong bearish gap and then bearish inversion, so this area is pretty strong here, so let's see if it holds up. If not, it can just go reverse all the way to the upside. Waiting for that candle close over the 13 EMA here for a possible entry. I'm just gonna keep continuing to adjust this here. All right, this is a strong spike up. We're gonna need a strong spike downwards to see if price could still trade below this bearish inversion. If not, then this next 1 minute candle is going to break outside of this gap. This outside of this bearish inversion zone. Let's see. Yeah, it looks like it did disrespect it. This bearish inversion zone right here. Right, this green candle close outside of it. So we'll delete that. This becomes, this 5-minute zone is broken as well. This becomes a bullish inversion zone right here now. All right, let's see if price could come back down and then we could trade off of it and then target this 1-minute liquidity up here. So I'll look for something like this and then target 1-minute liquidity up here. And now we're trading above. So the EMAs on the 1-minute is telling me it's bullish. I'm gonna switch to the Heikin-Ashi chart here. All right. Let's see. I'm waiting to see if we could get, now it crossed over 13 EMA, so now we're officially bullish and we're trading above, price is trading above the 13 EMA and 50 SMA here, so we're good. We are looking for a long upper wick, or the wick on the upper side is longer than the lower wick, and if that happens we'll look for an entry there. Let's see if this zone holds up. Yeah, it looks like it actually closed outside the zone on the 1-minute. Let me show you here. See how this red candle body closed below it? So this bullish inversion zone is no longer good. So we can't use that anymore. Yo, what's up, Andy? All right, so now we have this bearish FEG right here. I would say if price is able to trade up, breaks this bearish FEG to use it as a bullish inversion, then you could possibly use that as a trade there, as a zone. Do want price to close over this candle body high that created this bearish FEG as well. All right, so this would be a good bullish inversion zone to trade off of. See if price could come back down, respect it, and then we'll look for an entry to go to the upside. So price respected this bullish inversion down here. This one, bearish FEG. Let's see if it inverts this. It doesn't look like it. There's still pressure here, so look for something like this. That was a big spike up one night. These bearish inversion zones are going to keep price down. Let's see if price closes over this bearish gap here and then invert it. Yeah, this becomes a bullish inversion now. Also close over this candle body high. All right, so let's see here. Let's see how price respects this bullish inversion zone right here. The only thing is we have this bearish inversion zone sitting really close by. Even if you got in like right around here and say pull price pull back down, and you're looking for something like this, but then you have this guy and yeah, this guy and this guy keeping price down. So we'll see where the entry would be. If this bearish inversion zone was disrespected, then we wouldn't have to worry about that, and then we wouldn't have to start trailing if we did get in for a trade here. Maybe a close over it, disrespect it, and then we could delete that, have price pull back, and then look for an entry. I think a 5-minute gap might form after this candle closes. A big push up here, but let's see on the 5-minute. Yeah, this is a 5-minute gap that's forming right now. It looks like price bounced off of this level down here pretty well. All right, so what's closed over this? We'll delete that. Might close over this bearish inversion as well. Yeah. We'll delete that there. Might take this 1 minute liquidity as well. I might as well. Possibly if price comes back down to this bullish inversion, then we could target liquidity up above. Otherwise, it'll just keep going up. Take out this 1 minute liquidity here. All right, we have a lot of bearish structure at the top here, so this is gonna be a strong FVG here. It's connected to this bearish inversion. Took out this 15-second liquidity. All right. Bullish inversion. Delete this here. All right, on the 5 minute, we still have that gap that's forming down here from this candle, so I wouldn't take a trade off of this inversion zone right here unless that 5 minute gap is closed. Once that 5 minute gap is closed, then we'll be fine. It's got another like 2 minutes on that 5 minute gap. If that gap closes and prices can pull back into here, then we could look for an entry somewhere around from here, this bullish inversion, and then target this 1 minute liquidity all the way up here. It's just breaking all this structure. This FEG. Delete this for now. Let's see here. Price is still respecting these areas. Got 1 more minute on that 5 minute gap there. So this is the green candle that's making this gap down here. Once it closes, then most likely it won't change the size of this gap since price is already sitting all the way above here. Bull FEG. Yeah, we have 7 more seconds here. All right, so that gap is confirmed. Let's see if we get pull back into this bullish inversion zone right here and see if price could respect it and look for a long position. Targeting this 1 minute liquidity up here. We'll see. It's got a lot of structure, actually. 5 minute gap, yeah. You could target the 1 minute liquidity if it sets up. The only thing is there's a 5 minute gap here. Yeah, so I'd say the RR wouldn't be good. Just the 5 minute gap is just sitting really close by. So TP would, if liquidity, 1 minute liquidity is sitting above the 5-minute gap, target the 5-minute gap. If 1 minute liquidity is sitting inside of the 5-minute gap, target that liquidity. But if the 5-minute gap sits before the 1 minute liquidity, just target that 5-minute gap. The price is still respecting these areas right here, but maybe I'll set up, maybe get a good RR for this. Let's see. If price could pull back and we can enter somewhere something like this, then that'd be a better RR. Let's see how it respects this zone. So we're looking for something like this. All right, so tap there. Let's switch to Heikinashi. I'm looking for a green Heikinashi candle. This is a strong push downwards, so this zone might not be respected. But let's see. Yeah. So close over this bullish inversion. What we're gonna do is delete that one there. So that zone is no longer good to trade off of. There's this bearish FEG that's forming. Okay. Oh, I closed that zone last second, so we're just gonna delete that there. If that bearish FEG formed and price broke through it, we could use it as a bullish inversion and look for long positions there. Just gonna come back and retest this support zone right here. There's a bullish gap as well. All right, I'd say best scenario for a setup for a long position is if this bearish gap forms and then price breaks through it, comes back down, retests, and goes back up. The only thing is this is a big candle right here, big red candle, so price would have to close above here as well. This candle body. Close above here, come back down, and then look for a long position. So this bearish gap forms here. Let's see if it can become a bullish inversion. Right now we're trading in between, or we're in between tight place, this strong support level right here, and then we have this lots of bearish structure at the top. This bearish gap is still being held. Overall, we're still bullish on this on the inverse strategy. And 15-second liquidity up here. We have some buyers stepping in this area based off of this support level and this bullish FEG, but we're just gonna wait. Right now, there's some strong buy pressure from this green candle that closed over this 13 EMA here. But I'd say eventually this bearish gap here would get broken through. But let's see. You got buyers right here coming in. You got sellers right here in this area. You just don't want to get caught up in between these two. Price still rejecting off of this bearish gap here. Eventually it should break it, or it should close above it. Overall, we're bullish here on the 1 minute and then 15 and 30 minute time frames. All right, it's kind of hard to see, but that green candle body closed over this gap, so this becomes a bullish inversion zone here. Now buyers are in control. I do want price to still come up, close above that orange line, just because you do still have a lot of sell pressure from this red candle right here, pushing price down. From that candle body high, that red candle body high, you have lots of sell pressure still. bullish gap here. All right, so this bullish inversion zone is disrespected. Most people will take the trade off of just setting this up automatically and just hopping in once it forms. But yeah, wait for price come back, see if it respects it. But ideally, if it closes above this red candle right here and then comes back, then that'd be a better bullish inversion zone. Delete this here, but this one's disrespected. Still lots of sell pressure from this red candle right here. Even though this was a bullish inversion, you still got to be careful of that red candle that created that bearish FEG, right? So bearish FEG, but look at this candle where it started from and dropped there. All right, it's coming back down, retesting this area. So now you're caught up in between the sellers from up top here. All these sellers up here, and then you got the buyers down here. So you're caught up in between these two zones right now. Until a candle closes above this candle high, everything right in this area is sell pressure. Right in this area here. This is all sell pressure. Lots of sellers in here. Lots of sellers in here. Then you have the buyers down here. So you're caught up in between these two. In between these two zones. All right, this zone here might become a bearish inversion. So price might fail to, so on the 5 minute it's coming back retesting. It might fail to push back up, so it might just come back down this way, retest, and then go back down here. But let's see what happens on the lower time frame. All right, this becomes a bearish inversion right here. Also closed below this candle body low that pushed up. This is the candle that created this bullish gap initially. Now sellers are in control. This candle up here was the candle that created this bearish gap right here. and price never closed above that high. But this one down here, price, this red candle closed below this candle body low that created this bullish gap. So now this one's a strong bearish inversion. The only thing is we are trading in between these two. It's trading below the 13 EMA. If the 50 SMA was up here and it's trading below it, then that would be a good zone to take a sell off of there. But let's see here. Bearish FEG sitting inside a bearish inversion. This would be a strong sell pressure area right here, but let's see how price reacts. Just because the EMA SMAs aren't lining up, I'm not going to take any shorts from this area. But if you want to trade that way without EMAs SMAs, you can. Until I get this 13 EMA to cross over this 50 SMA and we trade below it, and that's where I'll take a short. Just so my confluences line up more. Just 5-minute gap over here. Right, this bullish cap becomes a bearish inversion. Also broke this close below this candle body low that created this bullish gap initially off of this red candle close. So this is a strong bearish inversion zone as well. I just don't like how this 5-minute gap is here. This 5-minute bullish gap. So lots of bearish structure above, and then you have this 5-minute gap inside this, or this bullish inversion on the 1 minute inside of this 5-minute gap. Bearish gap right here. So this is strong. Strong bearish gap. If this 5-minute gap wasn't here, then eventually this 13 EMA would cross over this 50 SMA. Price would pull back up into this bearish inversion, and then we'd look for shorts. So that'd be a better setup, or that'd be the best setup or possible scenario. But this 5-minute gap is gonna keep price up. Right now you're getting caught up 5-minute gap, and then you're getting caught up in all this bearish structure right here. This price is respecting this bearish inversion along with this bearish gap. On the 5 minute, we have this 5 minute gap right here. It looks like price came back, pushed down. Looks like it came back up, retested that resistance area as well. And tapped that this gold bar. All right. One minute liquidity down here. It's only 15 seconds. 15-second liquidity off of this candle low. Now on the Heikin-Ashi, you can trade inside of a 5 minute gap. It's just a lot more dangerous just because price can just reverse upwards once you're in the gap. But if you are taking the trade, 1, 2, let me see. So the entry would be it would have been like right here. So pulled back into the bearish inversion, came back down. Actually, no, these two just crossed over. So now we're bearish. So these two just crossed over here. So I wouldn't have entered right here. But if you want to be more aggressive and trade inside a 5 minute gap, you can. Your entry would be, we need a longer lower wick, and then stop loss would be right here. And then you'll enter off of the breakup. Looks like this lower candle wick is longer. So the next candle that breaks this, you would enter there, stop loss 2 candles before. But if that doesn't happen, see how it's readjusting. So you would have to readjust the trade here. This lower wick is longer than this upper wick. So if this next candle breaks below it, tags you in, then you can get in right there and then target 1 minute liquidity down here. See, you would be tagged into a trade. But then you would have to trail. Bullish inversion, I would trail the 1 minute. 5 minute, if you're inside the 5 minute, then trail the 15-second candle, just because you never know. So right now, if you were in the trade, you would trail this 15-second here and just keep trailing the 15-second. So trail this 15-second here. Yeah, trail this 15-second here. since you are in that gap. And then I think you get stopped. Yeah, you get stopped out, right? And a little bit of profit there. But that's how you would trail that trade. I just don't like how it's in the... I just hate how there's a 5-minute gap there. Just delete all this. Go back to 1 minute. That's a little bit more aggressive if you want to trade inside a 5-minute gap and then start trailing. If you want, whether if you want to trail the 5-minute gap or the 1 minute bullish inversion zone right here. Let's say if you weren't wanting to trail the 5-minute gap and you just trail the 1 minute bullish inversion, I would just put stop loss right here, where, or move stop loss to here, where it would actually just tag you out right now. So, but even then, I think that trade you would be in like a little tiny bit of profit there. Okay, let's see what we have. Bearish inversion. Sorry, bearish FEG. Alright, bearish FEG. Let's see. It might become a bullish inversion here. Yeah. Bullish inversion. It can come down, retest it, but you still have this. See where this red candle here, this candle body high. This is the one that created this bearish inversion. So you still have lots of sell pressure in the area. I think most people who draw out the inversion zones, I never really see them take a look at the candle that created that bearish gap initially. They'll just be like, oh, bullish inversion, let's take a long here, and then, you know, get wiped out. Let's see if this zone holds up. This looks like it's playing below this bullish inversion, so might just, yeah, it's disrespected that one there. But look where the 13 EMA 50 SMA is. Price is trading below it, so overall we're bearish on the 1 minute. All right, right now we're caught up in between this bullish inversion zone. You got some buyers here, and then you got some sellers from up top. Bearish inversion, bearish gap, retest of this resistance level and the gold bar up above. Eventually price probably will continue downwards. Just lots of bearish structure at the top. The only bullish structure is this bullish inversion, this 5-minute gap here, until you get down a little bit further. There's not much bullish structure up down here as much. Then also the EMAs, SMAs, EMA and SMA are bearish. There's a bullish FEG right here. This bullish inversion zone is still keeping price up here. That's why I like trailing when or moving my stop loss there when you're in a 5-minute gap or hits a 5-minute gap, or when you're in an inversion zone, just because in those areas price can reverse off of those areas, or it could just do what it's doing right now and just stall. Just because in those areas you have people are there wanting to buy, and then up here you're, you know, lots of sellers up at the top. Overall is bearish, so eventually I'd say on the 1 minute it's bearish based on the EMAs, SMAs. Eventually price can just break this 5-minute gap in this bullish inversion. Usually if it's hanging around in this area for quite some time, it may end up dropping. There's people who are buying, but there's only so many buyers. There's only so much you could buy until the sellers are just keep pushing price down. Looks like this bullish inversion is disrespected, so you can still delete that. This red candle closed over this red candle body closed below this bullish inversion, so you can just delete that. Still inside this 5-minute gap though. So 7:20 now. Pretty much done for today. Did catch just like a small scalp on an earlier trade, but overall not too bad. Wasn't much setups here that were respected. All right, the price is gonna continue, whether if it wants to come down and break this bullish inversion down here. So if you're able to find any trades below this area and then target down here, that'd be better, just because there's not a lot of bullish structure up at the top here. If you're looking to take some buys for whatever reason and you're caught up in this bearish inversion trap, a lot of sellers, a lot of bearish structure up here, then that wouldn't be too good. Some may take some buys off this bullish FEG on the 5-minute, but then once you get up here, you're hitting all these bearish structure along with this resistance up here. So all right, I'm done for today. Not too bad. We're running back again tomorrow. The rest of the week just gonna continue. Not too bad of a day. Catch you next time.